Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top 5 defensive picks for a possible upcoming crash. Right now, there's a lot of speculation, a lot of emotion in the market, so it's always smart to have some defensive picks on your side. So if the market does fall, you're in a good spot. So we're going to be covering some of these top stocks to buy. Hope you guys enjoy it. If you guys get anything in value, hit that like button, subscribe. So let's jump into it. Come on. Alrighty guys, so stock number 1 is ticker symbol ABBV. Now the reason why a lot of investors love this stock is because it's outperforming the S&P 500. Right now the S&P 500 is down about 25%. So if you'd have invested $100, you're down about $25. But if you'd have invested in ABBV, you're up about 5%, which isn't much, I get it. But this is why you need to have some of these defensive picks in your portfolio, stocks that don't move as much. On top of that, looking back, anytime you guys invest into this stock, you're going to be getting a dividend of about $1.41 per share per quarter. So this is pretty decent. So you're going to be getting a stock that is a defensive pick, is going to be appreciating. On top of that, you're going to be getting a passive income stream. So it's like a perfect storm. On top of that, this is a company that you don't have to worry about, right? The company brings in a lot of money, brought in about $14.5 billion here. On top of that, their previous earnings, $13 billion. So we have an increasing earnings. We have increasing dividends. It's just a beautiful stock that you do not have to worry about. Now, stock number 2 is ticker symbol KO, also known as Coca-Cola. You'll notice we have a beautiful upward trend. The stock is up about 2% this year, which is still outperforming the market. On top of that, right now, with investing into this, they offer a dividend of 44 cents per share. And this is what you call a dividend king. So they've been paying a dividend and increasing that dividend for 50 plus years, which is crazy. On top of that, looking at this, you'll notice that we have some heavy support right here at $57, right? It hit it several times, and we just get natural buying pressure near and around that price. So for me, this represents a great opportunity. Pick up a couple of shares of Coca-Cola. You know Coca-Cola is not going anywhere anytime soon. On top of that, their last earnings beating expectations, bringing in $11.3 billion, a company you do not have to worry about. Now let's continue. Stock number 3 is the one and only Home Depot, ticker symbol HD. You'll notice Home Depot has been a lot more volatile, but the reason why I love this one so much is because this thing is beautiful. It has some heavy support right here at $265 a share. You'll notice we've gotten buying pressure there in the past. On top of that, company has a dividend of $1.90. This one here has seen some volatility this past year, so it is down, right around where the S&P 500 is down. But I definitely think looking back, in the next two to 5 years, we're going to be wishing we would have bought some of Home Depot just because of how much money the company brings in. Company brought in about $43.7 billion. And you'll notice that on their earnings announcement, the stock actually popped up. And then we've just seen the general market start selling off. And that's why we've seen this sell off. So for me, you can't go wrong with buying Home Depot. We all know what they do. The biggest competitor with them is Lowe's. Both of the stocks are fantastic. Stock number 4 is ticker symbol PG, also known as Procter & Gamble. Procter & Gamble is a staple defensive pick. This one here does not move as much as other stocks. On top of that, if you look at it, we have some pretty hard support right here at about $135. It got natural buying pressure several times there. On top of that, right now, the stock is paying a 91-cent dividend, plus their last earnings beating expectations on their revenue. This one here has seen some volatility, but on top of that, it's actually still doing pretty well for how volatile this year is. And with these defensive picks, yes, if the S&P 500 sells off, most of these stocks are going to continue to sell off, but you just want a stock that doesn't move as much, a stock that doesn't sell off as much, one that kind of keeps your portfolio in balance, so you can keep getting those dividends, so your account's not swinging as much. Procter & Gamble is a perfect pick. And the last and final stock here is ticker symbol J&J. Johnson & Johnson, you'll notice, yes, it seems very volatile, right, with these ups and downs. But looking at it more closely, the stock, has gone from 184 bucks all the way to about 165. So it's sold off about 10% comparing to the S&P 500, which has sold off about 25%. Also, Johnson & Johnson is a company you don't have to worry about. People need their products in bull markets, bear markets, all of that good stuff. Pharmaceutical company that makes a whole bunch of stuff. The company does pay a dividend of $1.13. Their last earnings blowing and beating expectations here. So this one here, beautiful stock, beautiful picks. It's always smart. Have some of these stocks in your portfolio. It's going to keep your account more level-headed, less volatile, and all that good stuff, guys. So that is it. Hope you guys enjoyed it. If you did, hit that like button, subscribe, and we will see you guys later. Remember to stay happy, guys, stay positive, and stay safe. Take care, everyone. So I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.